So after working with close to 300 financial advisors and their teams one-on-one, and then speaking with more than 2,000 of the most successful advisors worldwide over the past 3 years, I identified the top 2 reasons why investors transition with their advisors when moving to a new firm, and it has nothing to do, neither of these reasons has anything to do with your technical expertise. Today I'm going to share with you how to leverage both of those reasons to make your investor clients stickier when you're ready to either go independent or transfer to a greater opportunity with a different firm. Hi, I'm Jon Cook, founder of Keynote Content, helping you slash through the noise, stand out as a preeminent expert, and reach your larger audience through speaking opportunities. And when a financial advisor, an investment advisor, retirement advisor, whatever your OSJ allows you to call yourself, when someone in your role, when you choose to change firms, it can test the investor loyalty. With your clients inside your book, they're tested. They're going to stay with you, or you're going to stay with your broker dealer. And whether you choose to go independent, maybe go RIA, or maybe you want to go in with a different firm, want to stay essentially in the same type of setting inside like a broker dealer, how much of your book will actually follow you to your new role? That's the huge question that your new firm, or maybe even yourself, if you're starting your own firm, that's the huge money question that you're asking, is how much of my book will actually transition with me? That's a constant question I hear with advisors from all over the world. I'm ready to make a move, but I don't know how much of my book is actually going to go with me. A typical advisor who transitions to a new advisory opportunity, they're still saying as an advisor, whether it's going independent or moving to a different broker dealer, typically on average you see around 60 to 90% of their book transitions with that advisor. But I like saying on average 60%. I don't know about you, but maybe the idea of losing 40% of your client base and your income, that sounds like a terrible idea. So how do we increase your client retention rate during and maybe before the transition as a financial advisor? That is a key question that I've personally researched over the past 2 years. I've hosted hundreds and hundreds of conversations, roundtables, group conversations with like 2 or 3 people, one-on-one conversations with over 2,000 advisors of the top advisors from all over the world. Think of any major city in the world. I have spoken with an advisor who lives and invests in that city. They are located in that city. The average AUM, just kind of giving you a bit of a profile of these average advisors that are these top advisors, their average AUM is over $220 million AUM. Several of which, that means they're personally responsible, not just their team, but they are personally responsible for an average of $220 million of AUM. And for several of the advisors I connect with, they have over $1 billion in assets under their personal purview. So I asked these advisors, for those of you who maybe you've transitioned from one firm to another, or maybe you've started your own firm, what were the top factors that influenced whether investors in your book followed you? And of course, the number one reason is no surprise. The advisor-client relationship is the obvious top choice, but there were a few subtle details about these conversations about this factor that increases an advisor's odds of clients even more. Of a client transition with you, there are a couple different details. It's not enough to say that you have these regular touch points with your clients. Call them calls, emails, anniversary cards, gifts, it's all those things. It's the depth of personalized attention that elevates the efficacy of those touch points. Now, you're likely used to kind of giving a bottle of wine or maybe a drink of choice to a client with your name and your logo on it, or maybe it's a gift, but it's a completely different experience when that same gift shows up with their name and their company logo or their monogram on it. It has a completely different effect. If you haven't read the book before, Giftology by John Ruhlin, incredible book. It is a must-read book for any type of advisor, no matter where you are geographically, no matter the size of your book. Read Giftology by John Ruhlin, and it will completely change how you do gift giving for your clients, for your friends, for your loved ones, or even as you look at the idea of gifts and generosity. The link is in the description below. You can get your copy of Giftology, but I highly recommend changing how you actually use a more personalized approach, a more boutique approach to the relationship that you have with your book. Each client inside that book deserves more personalized gifts. The second biggest reason about why an investor chooses to go or follow an advisor to a new opportunity, even going independent, is the advisor's proprietary process. High net worth investors are keen on knowing how you do what you do compared to what all these other advisors do. Your actual advisory services, those are fairly common. That's the least differentiating thing about what you do is your actual services. But your proprietary process, how you do what you do, that is the greatest differentiator for you as an advisor to help you stand out in your marketplace. But it's also the most important factor for why more of your book will choose to transition with you to a new advisory role. Let's say that your relationship with your clients, it's only decent. Maybe you have kind of a short-term relationship. You've only been with that particular firm for less than a year. You don't have a great relationship, but the right investors will stick with you to a new opportunity if they see that your process has some power and it elevates their overall experience, and you still, of course, get some good results. Of course, it can't be promissory, you can't focus on results, but if your process elevates the overall experience, that is exactly what they're looking for. Now, in case you're not familiar with this idea of having your own process as an advisor, let's start with what to call it. Some call this a method, a process, a framework, a pathway, a whole variety of other names, but whatever you call it, it's the same concept. This is your step-by-step plan for guiding investors to have a consistent, fulfilling experience while working with you. Now, how many steps are inside a typical proprietary process for financial advisors? Typical process has 3 to 7 steps. And I don't recommend having fewer than 3 steps or more than 7 steps because it needs to be memorable and it needs to be easy to navigate. You need to be able to put it on the back of a napkin and not run out of space or go, well, I guess it's those 2 things, that's it. Your process is different from your broker dealer's process, if they have a process at all. This is your own experience, 3 to 7 steps that you can show your clients. What can you expect? Where do we start? Where am I offering you more value, giving you more value than other advisors in the space? As you look at this process, what it does is it closes the potential exits so investors will want to keep working with you wherever you choose to work. That's what a proprietary process is. That's what the number of steps is. And creating your own framework, creating your own process, I use those words interchangeably, process, framework, it's the same idea. Creating your proprietary process is one of the best investments you will ever make as a financial advisor. The good news is that you have probably at least some working form of a process, maybe even a verbal version. Start with that and document it. Put it all out on paper. What are the steps? Where do you start? What is the outcome from a desired experience standpoint? What are some key details you include in basically each conversation with new clients who want to start working with you? Because when a new prospective client says, all right, I'm ready to work with you, they start asking, where do we start? What do you need from me? What's your process? And how you respond in that situation, it will telegraph to an investor one of 2 things. They'll either say, oh, this advisor is just like everyone else that we just left back there. Or it will tell them, this advisor is different and I can clearly see why. If you don't have a clearly documented process, you're left talking about products and about the company's history and a slew of other details that frankly, no high-level investor really cares about all the company history and all the details in the products. But with a solid process, you will stand out more. You'll have greater loyalty from your first conversation. Why? Because investors aren't simply trusting your experience and your expertise, they're trusting the process that puts that experience, puts that expertise into sustainable, trackable action. So it comes back to all this is great. You want to know, I have a strong advisor-client relationship. I have a great process in place, but how do I improve the stickiness of that client relationship and their loyalty before I decide to make the leap to a new opportunity? Especially if you're starting your own firm, how do I improve that client retention rate? And no matter what you tell your team leader, they know, and you know, that advisors don't just choose to leave firms overnight. It sits in your mind for weeks, sometimes months, or even years. And if you're considering that switch, maybe it's to a different firm or starting your own firm, this is when you want to identify which clients are more likely to transition with me and which clients do I actually want to transition with me. So how do you test your book's loyalty without raising any unnecessary questions with your firm? You need to set the premise. You're gonna ask them 5 different questions inside kind of like an interview style, very conversational setting, but I wanna set the premise. It's worth setting this premise for asking these questions. during your next planning session, your portfolio meeting, touch point, whatever it might be, use this language to set the tone. You can say, we're looking to elevate how we support each of our investor clients and learn where are there some potential opportunities, what are we doing well, and where can we elevate this experience for you even more. Are you okay if I ask you a couple questions? Just nothing real formal, I just want to ask you a few questions so I can have a better understanding. Are you okay with that? Of course, they're going to answer yes, because who doesn't want a better experience? And that's when you ask these 5 questions. Just ask them in a very conversational, natural way, not like it's an interrogation, some type of formal interview. You just want to be very conversational. So here are 5 questions that you can ask to find out where exactly is this investor's loyalty. Is it to me? Is it to my firm? What's the mix? Where are they standing right now? You're going to ask them, since we started working together, what do you most appreciate about the experience? The second question is you can ask, do you find more value in what your company has to offer or in working directly with me as your advisor? Do you love what Edward Jones or Charles Schwab offers or the experience of working with me as your advisor? The third question is you can ask, what are some opportunities or gaps that you'd love to see us offer that maybe my firm doesn't offer yet? Fourth question is, as an investor, what do you see your financial situation like now compared to when you first started working with me? You get a little bit of a before and after, and it helps them be able to reflect and look back at what has been markedly better because I've worked with this advisor. And the fifth and final question is that you ask, what parts of our process are most appealing and helpful to you? What you're doing is you're creating this breadcrumb trail to kind of discover, where are my investor clients seeing the value beyond I have a great personality, I've got a Hollywood looks, or maybe I have just tell jokes, I'm funny, or I have all the right credentials. What do they most appreciate about your approach? Where are their gaps and what are you doing well? And once you have those answers for all those 5 questions, give each client an internal grade of how likely you believe that they would follow you to a new firm. And don't share that with anybody inside your business unless it's somebody who's going to be transitioning with you, like a fellow advisor, and you have this agreement together. We are going to do this. We have something already signed, whatnot. Don't share that with anybody unless you absolutely need to share what those internal grades are. And you can put investors then in different tiers. So tier 5, 4, 3, 2, 1, whatnot. How likely do we believe that this investor client is going to transition with us to the new opportunity? And that insight will also help change how you position yourself in the marketplace. With your process, are people staying with you because they love your products or because they love your process? Having all of your clients, all of your investor clients having some type of internal grade, it's not going to guarantee that they will automatically transition with you, but it will give you a much better idea of what you can expect before you make that leap. And that insight, that will help you also inform, how am I going to position myself in the marketplace moving forward? Are investors working with you because they love your product suite or because they appreciate your process? Because advisors, they typically don't lack investment products, but a poor or decent but not great process that can dramatically lower investors' willingness to transition with you to a new opportunity. Focus on those 2 factors, your advisor-client relationship, which you're probably already focusing on, but then a focus on implementing a strong proprietary process. Both of those together, focus on that for at least a short period of time. It will automatically increase a client's likelihood to transition with you to a new opportunity. And if you like what I shared today, please give us a thumbs up and hit subscribe to catch more of my videos about how to stand out as a preeminent expert with a message that cuts through the noise and connects with the right crowd. And earlier I mentioned having your own process, having your own framework, that's the second greatest factor. But the question is, if you don't have your own process, how do you create one? Creating your own process, that can be as simple or as complex as you want, but I put together another video walking you through the exact approach that I use to create your proprietary process from start to finish. Hit play on this next video. I'll see you there.